All right, dear students, this lecture is very important as we are aware of the audit and assurance paper that it contains a regular question from the substantive procedures. And if we talk about nowadays, it constitutes around 30 to 40% of the exam. Like we do have a full-fledged question on it covering 20 marks. So 20 marks for as a full-fledged question. And then we have the as a something coming as a part. For example, there's a report question and something is coming as a part of it. And then we have the objective test questions coming up from the substantive procedure as well. So there are chances that you will be getting around 30 plus percentage. When I say 30% plus, that means more than 30, and it can be even sometimes 40. So that means it is a significant portion of the exam, and you need to handle this thing with care. The bad news is that most of the students consider this topic as a very difficult topic, and they always struggle in making the appropriate procedure. But the good news is that this topic is very conceptual. If you understand the technique, if you understand how to make the audit procedure, this will become quite easier for you, because it's not about the straightforward, the knowledge-based audit procedures that you can learn and you can apply in the exam. Nowadays, we have the case study for it. There's a case study, for example, something relevant to the disposal, something relevant to the revaluation, sometimes restructuring, sometimes issuance of shares, sometimes inventory. So a case study contains multiple, parts, and then we need to make the audit procedures relevant to the case study. So we cannot cram each and every procedure. It is not practically possible and then apply it over there. Obviously, you will be doing some cramming. You will be learning key terminologies so that you are writing the correct audit procedure in the exam. But you cannot learn each and every procedure from the notes and then apply it straight away. You need to understand the technique before you apply the procedures in the exam. And in my previous videos I have done many questions on the substantive procedures, you know it very well that I have already explained the techniques to you, including AEIOU, that is analytical procedures, inquiries, and inspections. And then what are the source documents, how we check the accounting treatments, what are the assertions related to the class of transactions, and then account balances, and then disclosures. We have already discussed those things. I'm not going to discuss those things in this lecture. The focus of this lecture is to explain you that how we are going to write the complete procedure. The complete procedure, when I say, that means that is capable of earning you the complete marks. And we know in the audit exam, F8 exam, for example, if they ask you to write for 5 marks, that means 5 procedure. So one or each well explained audit procedure is for 1 mark. So 5 marks means 5 procedures, 6 marks means 6 procedures, and this is how you are going to write in the exam. So the complete procedure. And if you read the examiner reports and other relevant reports from different teachers and tutors, they'll tell you that the significant issue is that the students are not writing the complete procedure in the exam. For example, they write, okay, review the board minutes. Now, why you are reviewing the board minutes? For example, they say, inspect the purchase invoice. Why you are inspecting the purchase invoice? So the procedure, when it is not giving the complete meaning, it will not earn you even a single mark. So this is very important to understand, that how the complete procedure looks like. So what we are going to do is, I have divided the audit procedure into 3 sections. And this is, another technique that I'm going to explain you. I've already explained you many techniques in my previous lecture. So this is something new for you guys, and I'm going to give many examples to make the substantive procedure easy for you. That is why the heading and the name of the topic is Substantive Procedures Made Easy. So the effort is to earn you the maximum marks from this topic. And if you're going to earn the maximum marks from this topic, believe me, you are going to pass this paper in the first attempt. So the first section or first part of the audit procedure is the action and the procedure. Now we know the evidence gathering techniques, analytical procedures, inquiries, inspections, recalculation, reperformance, and then other than that we have external confirmations. So these are the evidence gathering techniques. We have already discussed this thing in the previous lecture. Evidence gathering techniques. So the comparisons, the inquiries, the inspections, recalculations, and I already explained to you the analytical procedure is all about comparisons of with the previous years, with the similar companies, and then discuss or inquire with the relevant personnel, and then inspection of the documents, and then recalculation, and then reperformance, and then we have the external confirmations. Other than that, when I, so these are the procedures, and other than that, when I say actions, so actions mean, for example, obtaining something, tracing something, reviewing something, agreeing something, costing something. So your procedure starts with an action. So action or procedure, which technique you are going to use, what procedure you are going to use. When I say procedure, that means either comparison, either discussion, inquiry, inspect. And then action means what you are going to do. Are you going to obtain something? Are you going to trace something? Are you going to review something, or agreeing something, or costing something? So this is the first part of the procedure. That means the action of the procedure. The second part is the subject. Now, the subject means that what you are going to test, what you are going to check, what you are going to inspect. So subject means what you are going to check, going to audit, going to inspect, going to compare, going to inquire, what you are going to recalculate. So this is the subject. So what you are going to check, inspect, recalculate, this is the subject. For example, now you're going to compare the depreciation rates. For example, compare the depreciation rates of this company with the similar company. Discuss or inquire the finance director. Inspect the suppliers' invoices. Recalculate the redundancy provisions. Obtain external confirmations from the third parties. So this is the subject. So the first part was the action. Compare, discuss, inspect, recalculate, obtain, trace, review. And the second part is the subject. So you need to start your procedure with these things. And then there comes the subject, which you are going to check, which you are going to inspect, which you are going to discuss, which you are going to ask. So this is the subject. And then the most important thing of the audit procedure, because these are usually the things the student can write, because obviously they have crammed the audit procedure from the notes and books. So this is not the weak point of the student. They usually do write these two things, audit action and the procedure and the subject. That okay, review the board minutes. Okay, they always write these things. The problems come here. The purpose, the objective, and the assertion you're going to test. Now, exceptionally, there are questions in the exam where the examiner asks you to write the procedure which actually confirms a particular assertion. For example, they ask you to write the procedure relevant to the valuation. Now, you're only supposed to write the procedure which confirms the valuation, nothing other than that. Similarly, they ask you to write the procedure which confirms the existence. Now, obviously, when they have specified the assertion, you cannot write anything other than that. So this is assertion. Now, similarly, if they ask you to write the procedure relevant to the completeness, now you are bound to write the procedure which confirms the completeness, nothing other than that. So you need to be aware what is completeness, what is valuation, what is existence. And I've already explained this thing to you in the previous lecture. So you can watch those lectures and you can get a grip on these assertions so that you know what valuation is all about, what existence is all about, what completeness is all about. So the purpose, objective, and assertion. Now the action was, the procedure was, you're comparing something, you're discussing something, and the subject is what you are comparing, what you are discussing. And then here comes the why thing. Why you are inspecting, why you are comparing, why you are agreeing, why you're obtaining, why you are tracing. Here comes the why. You should know why, what you are going to test and why, the purpose, objective, and which assertion it is going to verify. So for example, compare the depreciation of whatever company it is, this company with the similar company, to assess the reasonableness of the depreciation rates used, because we know the depreciation is an accounting estimate, and when it comes to accounting estimate should be reasonable. So compare, now the complete procedure would be, let me just write this thing for you. Compare the depreciation rates of this company with similar company. That when I say similar company, that means in the same industry. Similar company, or you can also write competitor company. You compare the depreciation rates of this company with similar company. Why? To assess the reasonableness of the rates used. Now this is the complete procedure, and this will earn you 1 complete mark. But if you compare the depreciation rate of this company with similar company, this does not give the complete meaning. Why you are doing that? Because to assess the reasonableness of the rates used. Similarly, discuss with finance director. Now, why you are discussing something? For example, if it is relevant to, let's assume, provision. So discuss with finance director to confirm that a present obligation exists at the year end, because we know there's a criteria for the provision that it should be a present obligation as a result of past event, and the amount can be measured reliably. So basically what you're confirming, the criteria of the provision. If there is a present obligation, then you can record the provision. If there's no present obligation, then you cannot record the provision. So discuss with the finance director to confirm that a present obligation exists at the year end. Now, similarly, inspect the supplier's invoices. Now, inspect is actually the action or the procedure, and the subject is what you are checking. That means the supplier invoices. And then why you are checking it? Inspect the supplier's invoices to ensure they are in the name of the client, confirming the rights and obligation. Because obviously, for example, if they're having any asset, let's assume if it is about any asset, so the non-current asset, so they may take invoices from another supplier, and those invoices may not belong to them. So what we need to do is we need to check whether the supplier has given them the invoices on the company's name. So inspect the supplier's invoices. Why we are doing that? To ensure they're in the name of the client, that means the company which we are auditing, confirming the rights and obligation. So that means if the invoice is on the company name, that means this asset belongs to them. If it is not on their name, then we need to get other evidences to confirm whether this asset belongs to them or it is a third party asset. So this is the action, the number one thing. And then this is the second thing, which is the subject matter, what you are checking. And the most important thing, which the student usually miss in the exam, and that's why they do not get the complete mark, is this thing, why they are writing this procedure, why they are applying this audit procedure, what they're actually confirming, what is the purpose of this procedure, what is their objective, and then which assertion they are going to verify. Let me give another example. So recalculate the redundancy provision. Recalculate the redundancy provision. to confirm completeness and agree to the supporting documentation. Now, redundancy provision means that obviously this is the amount that the company is going to pay to the employees who are going to get redundant. So basically, redundancy provision is an accounting estimate. It's a provision, it's an estimate. Now, obviously, what amount the company needs to pay, this is a law related thing and a contract related thing. So they have recorded a figure in their financial statement. So what we are going to do is we get the information first. Okay, how many employees are going to get redundant and what the company is supposed to pay to them. When we get this information, what we are going to do is we recalculate that redundancy provision to confirm completeness, whether they have recorded the same figure. Also, it confirms the valuation and agree to the supporting documentation. Now, obviously, supporting documentation means, okay, this is the amount that the company is going to pay. Where it is written in the contract, it is written in the law, it is written in the, the board minutes. So this is how we can do that. And similarly, external confirmation. For example, if it is about, the inventory of third party. Now, obtain external confirmation from the third party to confirm the quantity and condition of the goods, or you can simply write, obtain the external confirmation from third party relevant to the quantity and condition of goods to confirm the rights and valuation. So this is inventory held by third party, like the company's inventory, which is with the third party. So basically, we need to ask them, okay, whether this is the company's inventory or they own that inventory. If they say this is the company's inventory, that means this is the right of the company, this is the asset of the company. And similarly, in which condition that inventory is, because obviously if it is damaged, that means the valuation is lower. If it is appropriate, then the valuation is fine. So remember these three things: the action and procedure, the subject, that means what we are going to check, what you're going to inspect, what you're going to inquire, whom you are going to inquire, and then we have the purpose, objective, and then which assertion you are going to verify. So I've written some procedures for you and I've given them the different colors uh, to just to make sure that you identify that, okay, the blue is for the action, the procedure, the subject is in the green, and then we have the red section, which is the purpose, objective, and assertion. So for example, obtain, when we are going to use this action and the procedure obtain. Obtain, for example, a bank confirmation letter from the company's bankers. Now, obtain is the action. What we are going to obtain, the bank confirmation letter. Now, this is the subject. Why we are doing that? To confirm existence and rights and obligation. Now, obviously, the company is having a bank account, they have money in that. How we can confirm that the balance they have mentioned within their bank balance is the same in their bank account? So we can do that from the bank confirmation letter. So obtain a bank confirmation letter from the company's bankers to confirm existence and rights and obligation, because they have an account and obviously they have money in it, and similarly other procedures. Obtain direct confirmation. Again, obtain is the action. At the year end from the loan providers, now the company has taken the loans, of the outstanding balance, agree confirmed amounts to the loan schedule and the financial statement. Now, basically, you're obtaining the confirmation from the company, from the company's lenders, that how much amount they have given to the company, how much company owe them, and then similarly, you are checking whether the same amount is in the loan schedule and the financial statements, the outstanding balances we are talking about. And let's go to another term which is used in making the audit procedure, that is known as trace. Now, when we are finding something, when you are tracing and agreeing something, so trace is the action. All the outstanding lodgements. Now, outstanding lodgements in the bank reconciliation, where you have received the checks from your customers and you have submitted them within the bank and you're still waiting for the clearance. So outstanding lodgement means uncleared lodgement. You have deposited the check into the bank and you are still waiting the bank to credit in your bank accounts. So trace all the outstanding lodgements to the pre-year end cash book, post-year end bank statement. Now, pre-year end cash book, because obviously when you receive the check, you add them within the cash book, but it is not yet clear. So basically, you're looking to the bank statement whether this has been cleared, because if it has been cleared, it will be reflected in the bank statement and also into the paying book to confirm the valuation and existence. Because obviously, if those checks are not cleared and they are not appearing in the bank statement, that means this valuation is incorrect. Similarly, trace the items counted. Now, trace is the action. Items counted during the inventory count. Now, this is the subject. What you're tracing, the items counted during the inventory count. Basically, what you were doing when you were counting the inventory, you were recording the inventory into your inventory records. So trace the inventory counted during the inventory count to the final inventory list. Now, this is the list which has been given to you by the management, and this is what you have prepared during the inventory count. So basically what you're doing, trace the items counted during the inventory count to the final inventory list, whether those items which you have seen on the floor exist in the company records as well, because it verifies the completeness. Now, this is the assertion. Now, similarly, we have agree thing. Now, agree means basically there are balances at multiple places, and you need to see whether the same balance exists in all those documents and there's no discrepancy. For example, agree the balance as per bank statement. Now, this should be the same balance within the cash book and the bank information letter. If it is not the same balance, then that means there are discrepancies which needs to be sorted out. So agree the balance as per bank statement. Now, this is the bank statement which have been given to you by the company, to the original year-end bank statement, and also bank information letter to confirm valuation. If the same figure is there on the bank statement and the year-end bank statement and the bank information letter, that means valuation is correct. But for example, if you're writing agree the balance on bank statement with the bank information letter, now, why you are doing that? Because you need to confirm the valuation. So if you're not writing the objective and this purpose and this assertion, then you will not earn the full marks. So make sure you're doing that. Similarly, agree the closing balances of the loan, and obviously we have in the ledgers, to the trial balance and the financial statement to confirm completeness, because completeness means there's obviously it is being recorded where it should have been recorded. Similarly, we have the costing thing, and this is the total thing. When you total something, obtain the company's bank reconciliation. Now, first of all, obviously you do not have the bank reconciliation. Reconciliation is the file of reconciliation where they have compared the bank statement with the cash book. So you take the complete file of that and then cast to ensure arithmetical accuracy. Similarly, cast the non-current asset register totals and subtotals to ensure arithmetical accuracy. Now, casting, you can see something related to the totals. Cast the monthly payroll listing to verify the accuracy of the payroll expense. Now, casting is an action. What you are casting, the payroll listing, this is the subject. And why you are doing that? To verify the accuracy of the payroll expense in the statement of the profit or loss. And similarly, we have procedures relevant to the review. So you already have the substantive procedure notes where I have written the substantive procedure relevant to the receivables, payables, loans, bank reconciliations, issuance of shares, revaluation, additions, disposals, and then provisions and accounting estimates, redundancies, research and development, refurbishment. Every procedure is there, which you can have in the exam. So the substantive procedure is made easy. You need to understand the technique, and then you can cram the procedure. Obviously, in the practice sessions, I have explained you how to relate the crammed and learned procedure to the case study. We can do that by writing the names and the amounts within the procedure. You can watch those videos, but make sure that you are writing the complete procedure. Step number 1, procedure starts with the action, the procedure. Step number 2, you need to write the subject, what you are checking, what you are inspecting. And then we have the why thing, the purpose, objective, and the assertion. So this is all about the substantive procedures made easy. And now what you should do is go to the notes directly and read each and every procedure so that you get the complete flavor of this section, which is a significant proportion of your exam, at least 30 to 40%. And if you do the best in this area, definitely you're going to make in the first attempt.